Hello, this is Dr. Paul Cottrell, and we are recording this show on May 18th. We're going to be talking about some of the breaking news that is happening in New York, especially the boat incident that took place last night. And we're going to go over some of the other news, such as Walmart raising their prices, and my take on what's going to be happening in the markets on Monday, and some other news. So today is a little bit more low key, but what I'd like to do is I want to start with the actual boat incident that took place. Well, we're going to play a video from CNN here. But before I do, please help support my work by making sure that you subscribe to all my channels. I have 4 channels on YouTube. I have Brighteon, Bitchute, and Rumble. If you would, please share the links and ask your social media to follow me. You can also help support my work by donating on my website, the-studio-reykjavik.com, or you can be a paid member to my Patreon channel. It's through the membership and the donations that help support the work that I do. All these videos are for free. I talk about international news, domestic news, what's going on in the financial markets, how you can benefit from them, how to help with your health and wellness, and talking about different aspects of scientific endeavors. So please help support my work by going to my store, the-studio-reykjavik.com. Now, I have lots of different products, right? And throughout this broadcast, we're going to talk a little bit about them. But one great product that I have is Myotrol. Myotrol is a supplement that you should be taking, especially if you're 40 years old or older, where it'll help you build up muscle and it'll help you maintain muscle. Do resistance training. This has polyphenols, flavonoids, and lignans to help you build that muscle. It helps with the gene expression. When you get older, your gene expression changes. It's called methylation, but you can help it along by taking certain types of supplements and reduce that methylation and help with that certain types of gene expression. Make sure you do your resistance training. Take the Myotrol if you're 40 years of age or older. You can benefit from Myotrol also if you're an athlete, younger or older. It will help to build muscle and to actually help you recover because the lignans will help to reduce inflammation. So please go to my store, the-studio-reykjavik.com. Take the Myotrol. It stacks really well with Gladiator Barley to help build muscle. All right, let's go to CNN to cover this ship incident that took place last night.
This Japanese trick with orange and cinnamon will stop your blood sugar spikes for good.
The ship was departing from Pier 17, where it was heading out to sea. The pilot, the captain that was maneuvering the ship, lost, power of the ship and the current. Mechanical function caused the ship to go right into the pillar of the bridge, hitting the mast of the ship.
And that was NYPD's Special Operations Chief describing the crash of this Mexican Navy training ship into the Brooklyn Bridge. 2 people died. Dozens were injured after the ship's masts struck the bottom of the bridge. Now, an investigation into what caused this crash, that's still ongoing. But authorities say the ship, as you heard, may have suffered some mechanical issue that caused it to lose control. CNN's Gloria Pazmino is back with us now, and you have some more details for us. What do you know?
Yeah, Victor, one thing that's becoming very clear in the last several hours is we're learning more about the details of the ship, which raised new questions about exactly why the ship was going in the direction that it was going in the first place. As you can see in the bystander video, that mast of the ship hits the underbelly of the Brooklyn Bridge as it is collapsing up against one of the pillars of the bridge. Now, the Cuauhtémoc, which is behind me, this is a ship that's 160 feet tall. It has 3 masts, and the navigational clearance of the Brooklyn Bridge is only 127 feet. So we have a real question here about why the ship was heading in this direction. We were told last night that the Cuauhtemoc was making its way out of the harbor here in New York City, heading towards Iceland. But as we can see in the video, it was navigating towards the Brooklyn Bridge, which clearly is not tall enough for this ship to get under. Now, I want to show you the ship behind me. It was towed here to Pier 35 late last night. And you can see right at the top that mast that hit the bottom of the Brooklyn Bridge. And you can see it's bent on its side and it snapped almost like a tree branch when it hit the underside of the bridge. Now, there was no damage to the bridge, which had to shut down for about 45 minutes last night in both directions while they were assessing whether or not there had been any damage to it. And as you said, early stages of this investigation, sadly, 2 people died as a result of their injuries. At least 20 were injured and sent to the hospital. In total, 277 people were on board this ship at the time of the accident. As you said, Victor, the Cuauhtemoc belongs to the Mexican Navy, and it was here in New York City as part of a goodwill mission sailing around the world, you know, kind of a display of culture and Mexican pride. That's what it had been doing here in New York City in the past few days. It had been docked at Pier 17, which is in that direction. And it was late last night as it was making its way out of the harbor here in New York City that it struck the pillar of the bridge. In that video, Victor, you can just see how stunning it is. You can see just how close it got to where people are on the public parks there that are around the Brooklyn Bridge. You can see how many people are there, and you can sort of appreciate how much worse this accident could have been had the ship hit either another part of the bridge or perhaps another part of the pier. So I think all of those questions will be part of this investigation. The National Transportation Safety Board also expected to be a part of that investigation to try and figure out exactly what happened here, other than an apparent loss of power.
Or even if the mast had collapsed onto the deck, because there were hundreds of crew members who were there. We can see in the video, as tragic as this is with the 2 lives lost and the dozens injured, this could have been much worse. Gloria Pazmino for us there with the reporting at Pier 35. Joining me now to discuss, CNN transportation analyst Mary Schiavo. Mary, good morning to you. So there is a voyage data recorder, which I imagine is the marine equivalent of the data recorders we talk about in aviation incidents. What can be harvested from them, and how soon could we get that information?
Well, what will be harvested for them will be anything related to the mechanical positional things on the ship. And then depending on how the ship is instrumented, you know, there can be instruments that read the depths of the waters, the currents, any control input into that ship would be on there. And then, of course, there will be additional data about the river itself. And the East River is a tidal river, so technically it's an estuary, and the boat could not have been intended to be going under that bridge, because remember, even if it cleared the Brooklyn Bridge, there are 5 more it has to clear if it went that way on the river, and they all have a clearance of about 127 to 135 feet. But with the tides coming and going, that can change it by 5 to 7 feet, which means it's a pretty strong current, pretty strong tide. And so the instrument recorders can also record when power was lost, and it had to have been lost. They could not have been intending to go that way, to go under the bridge. It's possible. When it was lost, why it was lost, and they will also be looking at who was the pilot. Was it a local pilot? Often our local pilot will be brought on board to help navigate the tricky waters, but it depends. And so all those things will be revealed, and the investigators will have that information almost, instantaneously. They probably already have it and are starting to go over it.
Let's put up a map here to show just how close, for people who are not familiar, Pier 17 is to the Brooklyn Bridge. And to kind of double down and bold and underline your point, if this ship was headed toward Iceland and they were heading out toward open sea to get there, they certainly would not have gone in this direction. And the distance traveled between embarking on that trip to Iceland and the hit there at the Brooklyn Bridge wasn't very far, but it was being accompanied by a tug. Should we have expected, or could the tug have done anything to prevent this?
It depends on the power of the tug and what the tug knew. What were the communications line? Did they immediately communicate that they'd lost power? And that will be one of the important points of the investigation. And they'll also be looking at the maintenance records on that ship. Had it had problems with the control, the engines, the power, etc. As a, just a year or so ago, we saw that when we had the accident. We covered the accident in Baltimore. The ship had been having trouble, but it will depend on the lines of communication. And with the tug, you are supposed to have communications at all times. But it's possible that the currents were strong and it could not save it in time. And it also would depend, of course, if they dropped anchor.
Yeah. Hey, you bring up the dolly that crashed into the Key Bridge in Baltimore last year. Some obvious differences between the two. The Key Bridge collapsed. The Brooklyn Bridge is open this morning. The 6 people who died as a result of that collapse were living in Maryland, and the 2 who died in this incident are Mexican citizens. Does that alter the approach, the intensity of the NTSB investigation at all?
No, the NTSB, of course, Mexico will be part of the investigation. And the NTSB is very used to dealing with investigations that concern entities, parties, if you will, to the investigation from all over the world. No, there won't be any problem in coordination with the investigation. They're just used to doing big international investigations, maritime, rail, aviation. They have to do them all. And there won't be a problem with that. And the same thing on the Dolly. The crew was from around the world, so they're used to it.
Mayor Schiavo, good to have you. Thank you. I have a question related to the incident we saw with the ship in New York. After the Dolly crashed into the Key Bridge in Baltimore, the FBI opened a criminal investigation. And so both now are fatal incidents that hit bridges, NTSB investigating. What's the catalyst? What's the threshold to determine whether this also reaches the level of even looking to the potential of criminal activity here?
I think the answer to that, Victor, is going to turn on the issue of the boat losing power. That's kind of the similarity, right, between those two incidents.
Yeah.
In the case of the bridge in Maryland, there was immediately a question as to whether or not the people on the boat may have been responsible for the loss of power or may not have reacted appropriately when they discovered the loss of power. If they have those same sort of concerns or questions about last night's incident, then I would expect they'll react the same way. It won't make any difference to the FBI that one ship was owned by the government of Mexico and another one was a private carrier. That's not really a concern for them. There's also the possibility that the FBI would get involved to assist the kind of technical aspects of the investigation, the crime scene, as it were. Now, of course, this happened in New York City, one of the largest and most capable police departments in the world. It's unlikely they'll need a lot of FBI assistance, but that's another way that the Bureau frequently gets involved.
Andrew McCabe, thank you.
Do this 7 minutes a day until mid-June. We start on May 19th. By May.
All right. That's what happened in New York. So what we're going to do is we're going to do another video. We're going to take a look at another video dealing with Walmart here. They're going to be raising their prices. So let me find that. They're going to be raising their prices. So let's.
Developing today, Walmart responding to President Trump after he called out the chain's plans to raise prices later this month. Trump in a Truth Social post earlier saying Walmart should, quote, eat the tariffs. Here to break all this down for us, the CNBC retail consumer reporter, retail and consumer reporter. You do both.
Yes.
Melissa, thank you very much, Melissa Repko, for being here on this. So take us through all the back and forth on all this and all that's new today, and why Walmart was saying that it does need to raise prices, and yet the president's saying, yeah, I don't think so. You and China need to do something else.
So, Alex, this all dates back to Thursday when Walmart reported its quarterly earnings, and it warned that price increases were coming later this month and into June. Walmart CFO John David Rainey told me that they just can't absorb all the price increase. They plan to absorb some of it, and they said they expect their suppliers to absorb some of those higher tariff costs. But he said even with that lower rate of 30% on Chinese imports, it's simply still too high in his view. Here's more of what he said earlier this week.
We're wired to keep prices low for customers, but the level of tariffs that have been proposed is pretty challenging for all retailers, for suppliers, and certainly our concern is that consumers are going to feel some of that.
So you have to wonder, because I read somewhere, and again, I'm not as up on it as you are, but that there would be some increase in May and a further increase in June. So what gives now then?
The question is really where tariffs will ultimately be. Companies like Walmart are trying to make a bet on whether that 30% will hold or whether it will go up. And so they're kind of making these calculated bets. And it's worth noting they are importing holiday orders at this time. This is a crucial time. And so they were being hit with 145%, and some of the imports landed at that level.
But in response to the president, we put this up on screen from the CEO, we've always worked to keep our prices as low as possible. We won't stop. We'll keep prices as low as we can for as long as we can, given the reality of small retail margins.
Yes, it's worth noting that Walmart CFO told me that they will try to maintain their price gaps with competitors, which means they want to undercut their retail rivals. And that will mean, in some cases, they're going to absorb more costs. But it does raise questions about what this means for Target and what this means for smaller businesses that aren't in the same negotiating position with vendors and don't have that kind of financial leeway like Walmart does.
Okay. Thank you so much, Melissa Repko. Appreciate you coming in for that.
All right. So because of the raising prices of Walmart, there's going to be more news throughout the week about potential price increases due to tariffs. I think this is not going to be a big issue in the economy at large. I think that these tariff negotiations, even though the tariffs will be higher than before Trump's declaration of this, I think the economy will be relatively okay. I'm a little bit more concerned about what transpired with the lack of moving the bill forward for the tax cuts and what Moody's said in terms of our debt rating. Those two items I think are more pressing for the markets. So we're gonna talk about that. But before we do, please go to my store, the-studio-reykjavik.com, and get the Clarity Factor. Clarity Factor will remove that brain fog. It's going to help support your memory. And when you have positive neuroplasticity due to your neurons firing better, what will happen is that those dendritic connections will improve. Your memory will improve. You will think faster. You will be able to concentrate on your tasks at work, at home, in school. And it's a great way to improve your health, neural health. It stacks really well with NAD+, ubiquinol, resveratrol, and C60. We'll be talking about those later, but take Clarity Factor every day, get rid of that brain fog, help support your memory, and help get those neurons firing. And when you have those neurons firing and you're approaching this in a holistic way, where you're drinking filtered water, you're doing some exercise, getting better blood flow to your brain, learning new things, these are all positive for neural health. So please go to my store, the-studio-reykjavik.com, and get the Clarity Factor. Now, I also have vitamin C and magnesium. Vitamin C will help with your skin. It will help with your immune system, and magnesium helps with your brain health. Very important Also, magnesium is important to take to increase the efficacy of vitamin D3. So take the magnesium and vitamin C together, drink it with filtered water, boost up the immune system and boost up your brain health and help with your skin. I also have a dual purpose product called olive leaf extract. Olive leaf extract will help to bring down inflammation. That will help to boost up your immune system, and by bringing down inflammation at the vascular level, you're reducing plaque formation. So that's very important. And olive leaf extract helps to bring down LDL levels and increase your HDL levels. So it's improving your lipid profile. And by reducing LDL, you're reducing oxidized LDL. And oxidized LDL is what builds up plaque. So this will help with your cardiovascular health and your immune system. It's a dual purpose product that you should be taking every day. So please go to my store and get the olive leaf extract. And I've partnered up with Rainbow Herbals, and we have these great deodorants that are made from essential oils from the Himalayas. It's a dual purpose product. You can use it as a deodorant, but it's also going to detoxify your body. So use it daily. It's for males and females. You can get it in citrus and peppermint, lavender, and tea tree. So please go to my store, the-studio-reykjavik.com. Get the deodorants. It's for males and females. Get a couple bars for your household. Help support my work and help support your health. Again, it will help to detoxify your body, and you use it as a deodorant. It's made from essential oils from the Himalayas, extremely high quality, all natural, has no aluminum and no baking soda. With that said, let's take a look at some of the other videos that are going on here. I want to bring up the Moody's rating issue that transpired on Monday, or not Monday, on Friday. But this Monday is going to be worrisome. So let's listen in here.
What happens inside your brain 3 minutes after eating eggs? What's growing inside your brain right now could be wiping out your.
Was this deserved, or are you going to tell me Moody's
I don't think
is making a political
I don't
move?
think it was deserved. Well, I mean, actually, I didn't want to say that, but you said it, and the timing is just very strange. Look, the bill is working itself through the Congress. We have to see what it looks like. The CBO's estimates of how they score, I have real problems with. For example, they're assuming GDP at less than 2%. I don't know what Moody's is assuming, but when you have 100% debt to GDP, as Secretary Bessent has mentioned, that is not unusual in the world we're in, especially coming after a period of very low rates. You had negative rates and zero rates for much of the industrialized world. So here you are, you're downgrading the country that has the reserve currency. You're downgrading the country that's growing the fastest of any industrialized countries, and you're also downgrading the country that has the best productivity per capita of any country. So to do this, I'm completely nonplussed by it. It doesn't make any sense. And to do it on a Friday before even seeing a bill, which I think will actually potentially, I'm an optimist, to do some good stuff on the spending and certainly raise revenues. I mean, I just don't understand how, and I'm guessing this is behind Moody's analysis. I don't know because I've not seen it yet. But I mean, when you assume that an expiring of a tax package that's been in place for 7.5 years is somehow going to add to the deficit, that just doesn't that's fundamentally wrong, in my opinion. It's just very poor forecasting. So you have a big problem with what Moody's did.
Well, I'll give you some of Moody's reasoning, Joe, and I'm reading here directly from the statement. They say over the next decade, we expect larger deficits as entitlement spending rises while government revenue remains broadly flat. They say in turn that leads to large fiscal deficits, driving the debt and interest burden higher. What part of that thinking do they have wrong here? Is it the revenue side or entitlement spending going up? Because is that not the trajectory?
No, the trajectory, if you look at the CBO scoring, it's actually beyond the next 10 years where Medicaid are driving it. It's actually more so than Social Security, but that's way far out. I mean, the revenue share of GDP has been above its historical average. We've recently had a really excessive spending, and we have to see actually what that spending looks like. We're working with the Congress. Congress is working rather to pass a budget. So we don't know what the spending is going to look like. I mean, this isn't, we knew this was going to happen, Kaylee, that the long-term trends by some estimates look poor. This isn't new news. So why would you do it now without even knowing what the budget looks like? And by the way, 10-year yields were recently under 4%, and they've risen up into the 445, 450 range because we've taken recession risk off and the U.S. economy looks healthy. So I don't know. And term premium, by the way, which is higher, is still lower than where it was in January. So again, without going into all the details that Moody's came up with, their assumptions to me, I don't agree with. I don't agree with them.
Well, it's really interesting here when they point to $4 trillion being added to the federal deficit over the next decade. Joe, are you taking issue with the reasoning or the timing here? Because Moody's hasn't seen the bill yet.
No, the reasoning. So I'm assuming they're using CBO analysis. So for example, CBO assumes 1.8% growth the next 10 years. That is ridiculously low. It's a point or more less than what Trump had during his first 3 years. It's even a lot weaker than where President Biden was the last few years. The difference between 1.8% growth and 2.4, 2.5, I think we could be at 3, but whatever. If it's mid twos, the revenue difference on that alone is worth $2 trillion. If it's a 3% economy, which I think we can get back to, that's $4 trillion of differential revenues between what CBO is forecasting and what we would get based on just the growth. And that's keeping the revenue shares the same. So I have a real problem with those assumptions. They're economically doom and gloom, and I don't agree with it.
Well, when we consider, though, the wider economic context with which Moody's is doing this, yes, there are negotiations happening on Capitol Hill, Joe, but there's also negotiations happening with a number of countries trying to set new rates of tariffs that, according to the administration, are going to be at least 10% as a baseline. It's going to be very hard to get below that. And that brings us to the highest level we have seen in decades. Does that not have some bearing when we consider the fiscal health of the United States as well as potential inflationary or growth impacts that can have?
You were doing, I was almost with you all the way, Kaylee, on that. You're certainly on the revenue side. I mean, we're on track to run $200 billion of tariff revenue this year at the current run rate. That's a lot of money. It has yet to show up at all in the inflation data. Amazingly, the inflation data have undershot expectations. The problem is when CBO does its analysis, because it assumes it's part of law, it's got to be legislated. Those tariff numbers aren't even a part of it. So let's say it's only $100 billion. Let's say it's the bottom end, and that's super pessimistic. That over 10 years, that's another $1 trillion. I have to believe that when the budget comes out, there's going to be some slowdown in spending where you could save $1 trillion over a 10-year period. Because remember, it's $100 billion times 10 gives you the trillion. So the tariff revenues aren't even going to be part of this scoring, and they should, given how much revenues we're already raising.
Does this not strengthen the hand of members of the Freedom Caucus, though, who have expressed concern about rising debt and deficits? They've just got an interesting bit of company in this argument, Joe.
Well, certainly the fiscal hawks will use this as a reason to be more careful on the outlook. And as it relates to the spending, I'm all for it. Yes, we need to slow the pace of spending. By the way, when we talk about spending cuts, Mike, as you know, these are never cuts. They're only cuts from
just another Joe. It's just us two Joes talking here.
If we go from 6% nominal spending, let's say, to 5%, that's a 1% spending cut. So I certainly think we desperately need to slow the pace of spending. But again, because a lot of those deficit projections long-term are on the revenue side, they're assuming way too pessimistic growth. They're assuming that if we have massive tax increases next year, the largest ever, that's going to raise revenue. It won't work that way. But certainly on the spending side, there's room to cut, no question, or slow the spending anyway.
Well, Joe, when we consider that part of what Moody's here is talking about is the interest burden, I do wonder if you expect, given what we've already heard from President Trump about how he feels about where current interest rates are, if you would expect, knowing the president as you do, having worked in his administration, for him to be pushing for the actual rate set by the Federal Reserve to be lower, also in the name of the long-term fiscal health of the United States. Would you be surprised if he steps in with that argument?
Maybe, but here's what I want to say, though. If you look at the curve, the yield curve, as you know, is still very flat. And recently, the 2-year note was above the Fed funds rate. So you have a situation where the curve is flat, so the interest costs are significantly high. If we have lower rates and the curve normalizes and the funds rate is around 250 to 275, which is where I think neutral is, those interest costs are all of a sudden going to look a lot lower. And by Jay Powell's own inflation metric, his super core, which is the services economy, excluding energy and housing, it's 50% of inflation, has no impact or not any impact. Tariffs have no impact on that. That right now suggests monetary policy is as tight as it's been before the Fed started cutting rates. So there's a very powerful argument right now based on real rates that the Fed could and should be cutting. And as that curve normalizes and those short rates fall, the interest cost is going to come down a lot. I doubt that that's in Moody's estimates either.
Because of what Moody's did with the downgrade, we're definitely going to see higher yields tomorrow. Most likely we'll see higher yields in the morning session in New York's trading. I'd like to see what's going on tonight in the Asian market to see if equities will be selling off, especially the US futures market. I suspect that equities will sell off also. So with that, let's go to another video that I think is important to go over. Here we have Times Radio talking about how Trump's budget will wreck the US economy. But before we do, please go to my store, the-studio-reykjavik.com, and get the turmeric. Turmeric is an antioxidant. It's going to soak up free radicals. It'll bring down inflammation. And by bringing down inflammation, that's going to help with your vascular health, and that's also going to help with your immune system. You'll also recover quicker after a workout. Turmeric at higher doses can also help reduce arthritis, the effects of arthritis. So take the turmeric every day, very important as part of an anti-aging protocol. Now, I also would like you to go to my store and take a look at the great structural nano silver soaps I have. I have peppermint, lavender, and also charcoal tea tree and lemongrass. So please go to my store, get the great structural nano silver soaps that I offer, help support my work, get a few bars for your household, use discount 5 and you get $5 off any order. It's discount 5, all caps with the number 5. And you can apply that to any order and you get $5 off. So please go to my store and get the turmeric and get the structural nano silver soaps. And lastly, I have a great product. It's the structural nano silver toothpaste. This has no fluoride. It'll whiten your teeth, freshen your breath. Attic there. Not sure why. Get the structural nano silver toothpaste. It has no fluoride. It'll whiten your teeth, freshen your breath, help with the gum line, improve the health of your gum line, reduce inflammation at the gum line. And with taking this toothpaste and having good oral hygiene, you're reducing the chances of valvular disease and vascular disease. Very important to have good oral hygiene. So please go to my store, the-studio-reykjavik.com. Get this toothpaste. It's the best toothpaste that you can get. There's nothing out there that is better than this toothpaste. Get a few tubes for your household. Please go to my store, the-studio-reykjavik.com. Get a few tubes of the toothpaste. Make sure you use discount 5 and you get $5 off any order.
To start the process, we're going to replace the biggest item here, the dining table. It has served us well when it was.
But certainly, you know, they're free to make. That Trump inherited from Biden, bigger. You know, there's increases in government spending, and the only cuts come in later years. they'll probably never materialize. But even if they did, they're not enough to offset the spending increases and the other tax cuts that are contributing to even larger federal budget deficits, which are going to further undermine the U.S. economy.
Peter, great to be speaking with you. Let's reflect on the week that President Trump has had, touring the Middle East, going to various countries on the way, and I think overall setting the past aside to some extent in the interests, it would seem, of peace and, well, profit. Has he gone looking to the right place to make America some money?
Well, I think it was probably a good week for the president because we had some bad weeks before that in the aftermath of, Liberation Day and the tariffs that were announced. So I think that was probably a positive to divert attention, away from that. I don't know, to the extent the various deals that he may have helped negotiate down there. I mean, I don't necessarily like deals that involve governments, but as long as they're private companies, that's great. I mean, to the extent that there are some deals there. I know that the Qatar airline is owned by the government, so it was the U.S. with the Qatar government made a deal with Boeing. But sure, yeah. I mean, I think that particular part of the world offers a lot of opportunities, and certainly American businesses should try to take advantage of them.
The numbers are really quite huge. So Qatar and the US agreeing a $1.2 trillion economic exchange. Saudi Arabia promising to invest $600 billion in the US. And then there were major projects signed with the UAE. And that follows actually a commitment back in March to a 10-year, $1.4 trillion investment framework is how it's referred to in the US on the part of the UAE. Well, is this going to be something that's welcomed by business, by those private companies you speak of at home in the US?
But I don't even know what those investments entail or what the actual commitment is to make them. I know that oftentimes they throw around a lot of big numbers because they make headlines, but we'll see what actually happens. But certainly, they're free to make investments in the United States if they want to, if they think those are, going to be good investments for them. Depending on what they buy and how they buy it, I'd have an opinion as to the impact on the United States. But I don't even really know, what's going to happen. It's just like an abstract number. Yes, we're going to invest all this money, but we'll actually see what happens.
What is the situation at home? Trump's been talking a lot about deals, making deals. The UK is one such deal that he has been talking about. He was referring to his big deal with China as well, which was the kind of reduction in those huge tariffs from Liberation Day. But what is the picture at home? What is your assessment of Trump and his economic? Does he have an economic philosophy?
I don't really know. I mean, I think he does talk about the need to have less government and get government, out of the way of the markets, which is great. But I don't see any legislation that's really moving us in that direction. I mean, I really wish he was, making deals with Congress, not trying to make deals with other countries on trade. I think that the problems that America has with respect to our trade deficit have nothing to do with other countries, that they're self-inflicted wounds. We've undermined our own industrial capacity with bad monetary and fiscal policy and regulatory policy. And that's what we need to address rather than blaming the rest of the world for our problems and trying to, paint the United States as some kind of victim.
I think it's a combination of lobbying groups pushing for opening markets so they can do labor arbitrage, regulatory arbitrage in other countries, and then shipping the goods here, on top of poor monetary and fiscal policy in the United States. So I feel as though just pinning it on the Federal Reserve and fiscal policy in the United States as the cause for globalization, I think is not looking at the whole landscape of what's really going on, especially with these multinationals in the lobbying group on K Street to have access to labor arbitrage.
That has been ripped off and taken advantage of by the rest of the world, I think is counterproductive to actually solving the real problems. And in particular, this new big, beautiful bill that is being shepherded through the Congress that the president is waiting to put his John Hancock on. I would like to see him pushing back against that and threatening to veto that bill because it's big, but it's certainly not beautiful. It just makes the deficits that Trump inherited from Biden bigger. There's increases in government spending, and the only cuts come in later years. They'll probably never materialize, but even if they did, they're not enough to offset the spending increases and the other tax cuts that are contributing to even larger federal budget deficits, which are going to further undermine the U.S. economy.
Did he surrender to China in the trade war that lasted whatever it was, less than 100 days?
Yeah, I mean, I think it amounts to a surrender because Donald Trump imposed these, 145% tariffs on Americans buying Chinese goods. And obviously that is a problem for companies operating in China that would no longer be able to sell goods to Americans because they couldn't afford to pay those high tariffs. And initially, when Trump put those tariffs on, he postured as if they would stay there until China agreed to some kind of great deal and made a lot of concessions that would somehow shrink their trade surplus. I don't really know what China could have done there because they don't have very high tariffs. The main reason that we have such a huge trade deficit is because the dollar is so overvalued, I think, relative to the RMB. And, if the dollar were to go down, that would help out, but that would cause a whole new set of problems that the president probably doesn't want to deal with respect to higher inflation and interest rates here in the U.S. But, Trump took the position that those tariffs were going to stay there until, China caved in and agreed to whatever we were demanding. And China's position was, we're not going to negotiate until these tariffs are removed. And then China imposed tariffs of its own of 125%. And the only thing that the two sides really agreed to do was to substantially lower those tariffs, which China never wanted those tariffs. China only imposed them in retaliation to the ones we put in. And the purpose of the Chinese tariffs was to get us to lower ours, which we did. And, now these two sides are apparently negotiating. But I think that's a win for China because we're negotiating on China's terms, which are with the tariffs are reduced. Trump initially said, no, these tariffs are here as leverage, and we're not going to get rid of them until, you make a deal. And, China's position was, we're not even discussing deals until you get rid of the tariffs. And, the tariffs are gone and there's no real deal yet. I'm not even sure, what's being discussed. And in fact, now Trump has already backtracked on all the other deals that they were going to negotiate, because he said now they're not going to have the negotiations with all these countries that supposedly were lining up to kiss Trump's ass and begging for deals. Now Trump is saying, I'm just going to fire off a bunch of letters and I'm going to inform all these countries of what their tariff rates are going to be. So it's not, something to negotiate. Trump is just going to determine on his own, what tariffs are going to be imposed. But, the way Trump tells the story, this is how much he's going to charge these countries for the privilege of doing business in the United States. But that's not what a tariff is. The tariff doesn't charge foreign countries anything. The tariff applies to Americans. It's the charge that the U.S. government is going to impose on American citizens if they want to do business with these foreign countries. So that's where the letters should go. I mean, Trump should address the letters to the American citizens and send those out and say, in the future, here's what it's going to cost you if you want to buy goods from each of these different countries.
It is fascinating to hear your take, Peter, because I'm trying to work out in all of this and in the week that's just been and in the weeks that we've seen of this presidency, whether the approach is coherent, whether it makes sense, whether an economist, an expert like you can trace the thread through Trump's thinking in all that we've seen, whether it's China, the UK, or the Middle East over the last few days. Is there a coherence to what you are witnessing?
Well, I sympathize with Donald Trump's recognition that we have a serious problem in this country that has led to these enormous trade deficits that really has been bleeding the country. We've hollowed out our manufacturing infrastructure, our supply chains, and we've been selling off our assets. The U.S. is the world's largest debtor nation. We owe more money than all the other debtor nations of the world combined. You know, not too long ago, we were the world's largest creditor nation, and we used to run consistent trade surpluses. And so we're a shadow of what we used to be. And so America is in decline. And Donald Trump would very much like to arrest that decline and turn it around. And I share that goal. But the problem with the president is he doesn't really understand the root cause of the problem. And he's focusing on the symptoms, which are the trade deficits, rather than the disease that has resulted in those trade deficits, which comes from a U.S. economy that where we don't save enough and we spend too much, we borrow too much, we don't produce enough. And this has come about because of the tax code and the regulations and the artificially low interest rates, and are exploiting the dollar's reserve currency status to live beyond our means. I mean, we're able to trade the dollars that we create out of thin air for the products that the rest of the world produces at substantial cost to themselves. They have to expend scarce resources, land, labor, and capital to produce consumer goods, which Americans basically get for nothing. We just create money. Now, of course, to the extent that foreigners take those dollars and they buy our assets, they buy our real estate, they buy our stocks, they buy our bonds, they are accumulating these assets. And now we have to pay interest abroad, we have to pay dividends, we have to pay rent. But, you know, in the short run, we've also had the benefit of all of that, all of those recycled surpluses. We have a very high stock market as a result of that. And so Americans who have stock, you know, are richer. Our interest rates are much lower than they would otherwise be. So it makes it cheaper for everybody to borrow. So not only has the world provided us with goods that we don't produce, they've loaned us the money that we don't save. And that, you know, has benefited the government because it's been able to finance these huge deficits. People have been able to borrow money to buy houses, cars, credit cards. All of this is a byproduct of this trading relationship, which in the long run is harmful to the American economy. But in the short run, we get a high. You know, we get to live beyond our means, but at the expense of you know, really undermining our future prosperity when, you know, we're going to have to pay these bills. And so Trump understands this, but his approach is wrong, and it's not going to work. I mean, it may actually exacerbate the problems that he's hoping to solve, because the tariffs are just going to make what's left of American industry even less competitive. Meanwhile, you know, the underlying problems will get worse if we keep running up larger deficits. And in fact, one of the things that Trump is advocating for is that the Fed cut rates. And that's, you know, why we're in this predicament. Rates have been too low for too long. We need much higher interest rates. If we're going to reindustrialize, where is the money going to come from to pay for that? It's going to have to come out of savings so that we can make the capital investments that we need. Well, nobody's going to save any money if interest rates are so low. So we need interest rates that are high enough to prevent people from just going out and borrowing and buying stuff, and to encourage them to save so that we have the capital to make these investments. But Trump doesn't want that. He wants low interest rates. He probably wants the Fed to go back to QE, or he will. And that's, again, going to undermine the progress that he's hoping to make.
But Trump also wants a weaker dollar. So to weaken the dollar, you have to print more. So please go to my store, the-studio-reykjavik.com, and get the structural nanosilver gel in the tube form or in the quick dispenser form that I have. You use them the same way. They're dual purpose. You can use it as an aftershave. You can use it on a wound. You put it on a cut, an abrasion, or a minor burn. It'll help to heal quicker. If you're sick or someone around you is sick, put it on your hands, around your mouth, around your nose, around your eyes, around your ears, lightly coat your nostrils. It'll stay active for 5.5 hours. So use that. If you're not feeling well or someone around you at work or at home is not feeling well, very important to have. You can also use it as a daily skincare. So please go to my store, the-studio-reykjavik.com. Get the structural nanosilver gel. It is a dual purpose product. Have it available at work and at home. You never know when you need it. Now we're in the allergy season in the United States, but if you're in the allergy season, or if you're living in an area that has poor air quality, or even during the cold season, make sure you stock up on lozenges and drops. Really important. I have structural nanosilver lozenges and drops. I have it in elderberry zinc. You can get 21 in each bag for the elderberry zinc lozenges. And the drops, which are slightly smaller than the lozenges, you can get them in cherry, in blueberry, and in honey and lemon. Very high quality. You get 100 drops in each bag. So get the blueberry, honey and lemon, or cherry drops for the elderberry zinc lozenges. Buy a few bags for your household or for work. Right when you have that irritation in your throat, take them right away. It will help mitigate the problem. It'll help to protect that epithelial lining. It'll help to create that secretion that blocks that irritant from getting and irritating your oral pharynx and your oral cavity. Really important. Mitigate that problem right away. You start having that throat irritation, take the lozenges and drops right away. Very important. And I have C60. C60 is a antioxidant. You can get it in MCT coconut oil, extra virgin olive oil, or avocado oil. C60 has to be suspended in an oil because it's lipid soluble. Take a teaspoon a day, every day. Take it on an empty stomach for best absorption. If you work out, take it before your workout, and it'll soak up the free radicals that you're generating during your workout, and it'll help you to recover. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It's cheaper to purchase the higher ounce configuration because it's cheaper per ounce as it's at a discount. But you can also use discount 5 and you get $5 off any order. Take C60 every day. I've been taking it since 2016. Now, what you do is you take a teaspoon a day, and what that will do is it's going to soak up those free radicals, reduce the stress in your cell and in your tissue, so your organ systems are going to perform better, your endocrine system is going to perform better, your neurons will perform better, and your immune system will perform better. You're bringing down less stress. You're bringing down that stress in the cell, so the cells are going to perform better. You're helping with the mitochondrial health because you're soaking up those free radicals. The mitochondria is healthier. It's going to produce more ATP. You're going to have more energy. And when you have more energy, those cells and tissues will perform better. Also, for your neurons, by soaking up free radicals, you're reducing the stress in the neuron. You're increasing the ATP levels because your mitochondria is improved. And you need lots of ATP for your neurons so it can produce neurotransmitters. And so when you have those neurotransmitters firing, you'll have better memory, you'll think faster, and the health of the neurons will be improved. So please take C60 every day. What you will notice after a year of taking C60, that you visibly are slowing down the aging process. When you look in the mirror, you'll notice that you are slowing down that aging process, and soaking up those free radicals is very important. C60 is the second pillar of a core protocol that I have. The first pillar is taking max 35 or max 14 to boost up your immune system. The second pillar is the C60 to soak up the free radicals. The third pillar is the turmeric, ashwagandha, and lignans to boost up that immune system and to reduce that inflammatory response in your vascular system. And Boomer Boost is to boost up those energy levels and your metabolism. When you do this core protocol, you're going to notice that you're getting more longevity, you're getting more vitality, and you're slowing down the aging process. And a key feature of it is C60. So please go to my store, take C60 every day, take a teaspoon a day. So please go to my store, the-studio-reykjavik.com, use discount 5 and you get $5 off any order. Now, what I'd like to do is go to another video about oil.
More confidence in the market now that some of the tariff situation's been tamped down a little bit, at least for the next 90 days with regards to China. But that puts oil in a really interesting price for US producers. We're going to dig into some of that data this week in oil. Hey, I'm Aaron Keldo of the Oil Balance, and I'm here to elevate your understanding of the oil markets. So let's get into it today. All right. There's a couple of things I want to address from the comments. And again, thank you very much for your comments. They're very appreciated. One of them is that the OPEC increases are just to legitimize cheating. That's absolutely right. That's what's going on. They can no longer control places like Kazakhstan and Iraq. And as I mentioned time and time again, that's how these deals break apart. When people figure out, in individual countries figure out that they can just sort of produce whatever they want. So that's where we're in a really sensitive time. And we need to see how Saudi plays this, because Saudi's usually the biggest loser in these things in terms of, to get back dominance, they have to just come out and.
Let me just interject here really quick. So there's going to be a resistance level at the $65 a barrel level for WTI. And there is a major support level at $54 a barrel. That's the 61% retracement from the all-time low during COVID to the all-time high in the oil market post-COVID. Not the all-time high ever in oil, but just post-COVID. Oil has gone down 61%. It tested that 54 barrier and went back up. It is trading at about 62 plus, so it has about a 62 handle. It's having a problem at above 63, but there is a major resistance level at 65 and a major resistance level at 68.5. So just keep that in mind as we continue on with this video. Now, the trading range seems to be similar to the trading range that we're having right now seems to be similar to the trading range pre-COVID, but post oil shale production. So if you remember, oil shale production increased before COVID, and there was prices were starting to go down, and there was a trading range that was taking place. That trading range was anywhere from about 51 to about 65 when you take the high to the low point. But those are the spikes in that in price. If you kind of take away that 3 sigma and go to maybe the 2 sigma level for the trading range, you're looking at closer to about a 52 or a 53, going to about a 63 or so. So we're in a trading range. All right. I think that this trading range near term is going to be anywhere from 60 to about 63, maybe 64. So right now, 63 seems to be a little bit of a barrier there, but there's definitely a barrier at 65. So just keep that in mind, that if you're at about the 63 level, most likely it'll go down before it goes up, but it's all based on probabilities. There's no for sure thing. I would say that as you're getting closer to the 60, you get a little bit above 63, then you sell, and then you short it. If you get closer to about 61, then you buy. If you go below 60, that would be a huge indicator to buy. Again, major support level at 54. Could it go below 54? Yes, but it wouldn't last for very long. Reason being is that many oil producers in the United States would have to cap their well if there was a suppressed oil price below 60. There's about 3 tranches of oil suppliers in terms of their cost structure. You have people that have a break-even point at about 61 or $60 a barrel. You have another break-even point at about 55 and another break-even point at 50. So the most efficient wells, the most profitable ones, are going to have that low, that low barrel of oil break even at 50. The average ones are going to be at about 55. The ones that are a little bit weaker in terms of efficiency and their cost structure is relatively high and their break evens are higher. Now you're talking about 60 or 61. Now there is a number that's out there that the average is 61, but I think that you have to look at the granularity of it, that there are about 3 tranches of different break-even points for oil producers.
And increase production and flood the market. That's what they've done in the past anyway. Let's leave that issue for the next couple of weeks, especially as we go into the OPEC meeting on June 1st. We'll get a little bit more data about what is happening in the month of May over the next couple of weeks as well. So let's just hold that to the side for right now. There's 2 other things I want to get into though this week. One is the rig count, and we'll definitely be talking about that. And the second one is permits. So let's go ahead and jump in right now to the chart pack here. So as you can see, as I mentioned in the intro, oil prices are up for the 2nd week in a row. We've got it to almost $64 here earlier this week, and then came back down with some of the Iranian headlines going around. If you hadn't seen them, it looks like the US and Iran are having at least somewhat productive talks. The market's worried that that would let a lot of Iranian barrels come back onto the market very quickly. Keep in mind, there's somewhere between 20 and 40 million barrels of oil, of Iranian oil, on floating storage. So it's already on the vessel, sitting in, well, they can be in different places. Some of it's sitting right in the Persian Gulf. Some of it's parked offshore in greater Asia. But that, if there was some sort of agreement to happen, those barrels could come into the market very quickly.
Right. So this is the reason why oil is such an event risk. If there is an Iranian deal with Trump, then oil prices will start to go down, especially in the Brent market, and then the WTI market will follow suit. So that's a very high probability, if a deal happens, that we'll see suppressed oil prices. Now, if that does happen, there will be a price shock going negative. So there'll be a sell off in oil, and in that case, now you're talking about breaking the 61 barrier, the 61 support level, and you're now trading in a 50 handle range. I would suspect that if that did happen, that oil would start to march back down and potentially retest the 54 and then bounce back up. But that would also mean that the Saudis could ease up on some of their oil production with the stated reason to try to punish the 3 countries that were cheating on their quota that are part of OPEC plus. So if Iran does come to the market, then the Saudis they don't have to produce as many barrels of oil to suppress the price. So there's an interesting dynamic that's taking place in the Middle East about this.
Like I said, they're already on the vessel. It's just a matter of getting it to wherever that needs to be offloaded. So the market did come back down a little bit off of that. There's been some instability in Libya. As you might have seen, there was sounds like a hit taken out. For right now, it looks like production is doing okay, despite all the chaos happening in Tripoli. But I think it's really worth keeping an eye on. So that's another, million to 1.2 million barrels per day of capacity that in theory could be taken offline, and in the past for political reasons has definitely been taken offline. So we definitely need to keep an eye on that. But that leaves us sort of at the high end of the range that we discussed previously. As you can see, these 2 lines I have outlined here, the lows from the past couple of weeks, I think the last 27 trading days we've tested this low level support line right around $55 and bounced off at this. So there's only been 2 days where we actually either hit or came close to bouncing off the support line. These weekly charts make it maybe look a little bit more dramatic than it was, but really it's only 2 days that we tested those. And of course, this week we have much higher lows, which is a good sign for the bulls. That's what you want to see. But for the time being, we're at least stuck right at our resistance level for now. We have another sort of horizontal resistance level up here closer to $66, a little bit above. Of course,
he's similar to some of my targets, but like I said, I'm noticing in the trading that oil doesn't want to go above 63. There's definitely a barrier at 65, and then another structural barrier at 68.50.
Of course, we'd have to get through this sloping resistance line to make that happen as well. That could be possible, especially given this week's actions. And, with headlines, it'd probably be pretty easy to push that above there if we needed to. At any rate, this low $60 value for WTI does put shale in an interesting point. And we've been talking about this for the past couple of weeks. Diamondback, I think, put it very well that they're taking their foot off the gas. They're waiting to see what happens. They're not putting their foot on the brake. They're not putting their foot on the gas. They're just taking it off and kind of waiting to see what happens. On the gasoline side of things, we are seeing really good demand, at least in terms of total demand. So what I'm doing is I'm taking domestic plus exports, putting in a 4-week average to smooth that out a little bit because these numbers can be quite choppy. But as you can see, we're not too far off of 2023 levels, sort of the high end of the 5-year range here, doing a little bit better than a year ago as well. We should be continuing to see this trend upwards, just the seasonality of things. We're going into sort of maximum demand season as driving season really takes off. So we should see demand continue to accelerate, if you will, through June into July, and then we'll see what happens after that. Sometimes it does start to come off for various reasons. So at any rate, for the next 6 weeks or so, we should see demand continue to increase, which would probably be pretty good news for refiners. In terms of the margins, again, this is what sort of a view of what the refiners are looking at. In the Gulf Coast, we're still seeing the gasoline crack perform pretty well. In New York Harbor, not as well. We'll see in a minute where inventories are doing. Specifically in New York Harbor, they're adequate, let's say, where gasoline inventories are much tighter in other places like the Gulf Coast. If you look at the diesel side of things, ULSD, ultra low sulfur diesel, we're just kind of humming along a little bit better than a year ago. Nothing fantastic, nothing like 2022, but hey, it's still pretty good numbers. In terms of the actual NYMEX delivery zone, so remember most of the NYMEX futures contracts are physical delivery. So I think it's worth taking a look at. As I mentioned, Pad 1B, which would be New York Harbor gasoline inventories, had a pretty big drop this week. They've fallen to year-ago type levels after being, sort of middle of the range for most of April and May. This was a pretty big drop this week, and we are having refinery activity pick up. I'm wondering if maybe next week's inventory number maybe bounces a little bit higher if this was some sort of mistake or someone forgot to report or something. It seems a little bit odd to have such a big drop, but it's nothing terrible right now. Distillate stocks, Pad 1B, again, that's New York Harbor distillate, are quite low. We're not quite below the bottom of the 5-year range. We are definitely below year-ago levels, so still tight on distillate. Of course, Cushing crude inventories are low. They've been below the 5-year range here for the past 3 weeks. I think this is still a concern, especially as we go into the summer months. That's when those Cushing spreads really like to blow up.
And if that's the case, if Cushing crude stocks are lower than 5-year range, then there's a higher chance of being able to break over the $65 a barrel resistance level. The issue comes in is what's going on with OPEC Plus and the Iran deal. So you got these two competing. we have two competing issues going on. What's going on in the Middle East in terms of OPEC plus and Iran deal with Trump, and the 5-year average for Cushing crude stocks being lower, below the average. My guess is that oil for WTI will start to go up and want to press and get past 65, and then something will happen to the news where there's some sort of Iranian deal, and then all of a sudden the oil comes back down. So we're not going to hit the 68.50, but we may go above 65 for a little while and then come back down, and then start trading below 65, maybe 62, 63 range.
Wow, so maybe that's something else to keep in mind in terms of potential upside for crude, sort of regardless of what OPEC or anyone else does. And then propane, we're not building quite as fast as we did last year. We had a longer drawdown period than we did last year. Still a little bit concerning if you look at NGL stocks outside of propane, so everything else but propane, they're actually above the 5-year range, which is sort of interesting. So still seems sort of firm, especially on the crude and distillate side. On NYMEX related inventories, gasoline, like I said, we're kind of back to year-ago levels. My hunch is that inventories bounce up next week, but we'll see how that goes. In terms of West Coast prices at the pump, these are wholesale prices. LA definitely been taking off here the last couple of days, and then diesel got an uptick. Why this is important, especially on the diesel side, is we're looking for any signs of a drop in demand from the ports, and I do have port information coming up later in the presentation here for you. Inventories are really low for both gasoline and diesel, so I'm not too surprised that we get an uptick in prices. I'm not really seeing anything just yet that would tell me that demand is terrible on the West Coast. Demand seems to be humming along okay, and again, we'll look at the ship data coming in here in just a minute. So let's switch over to shale real quick, and I want to sort of address two issues, or just sort of let you know what's going on, and you can come to your own conclusions. The first one is if you put WTI prices in terms of, in this case, I chose 1985. It was originally for a different purpose, but I think it fits, it suits this conversation pretty well. If you take WTI prices and you put them in $1985, so there's been a ton of inflation, the dollar is worth about 1/3 of what it was the dollar in 2025 is worth about 1/3 of what it was in 1985. That's how much inflation's gone up since then. It kind of puts a different spin on how efficient that U.S. shale has really become. You can see we put in a low in domestic crude production right at 5 million barrels per day in 2008, and it's been sort of an uphill slug since then. Back in the 2007-2008 time period, in terms of nominal dollars, we were averaging $100, it should $99 per barrel in 2008. So prices were quite elevated, so it makes sense that we got a production response. What I want to point out, though, is more since shale really started taking off and we started to be able to export in the 2015, 2018 sort of range. Prices historically, if you, again, taking them back to like a 1985 type number, have been relatively low. So we've been stuck, again, in terms, between sort of mid-30s and high teens during that time period, yet production still continues to grow. So my point is not really $1985 in 2025. The point is that production has been able to increase during this time, when historically the value of the dollar, doesn't go quite as far, right? So that's really a testament to U.S. shale production that they've been able to squeeze those barrels out of the ground when objectively the margins are squeezing right back on them. The other thing I want to point out is in terms of rig counts, just the incredible efficiencies that have been going on. So the way that the drilling works these days, they're coming up with all sorts of innovations. They're able to put in much longer laterals. You see some of the literature where they're actually doing like a U-turn sort of lateral, so they go out a certain distance and then bring it back. So it takes fewer rigs to get the same amount of oil out of the ground. So one of the comments that I got was rig counts have been down. They've been down 5% over the past year. And yes, that's true. But we've also seen production continue to climb during that time. So what I did on this chart is I just took the tight oil production, that's what the IEA calls shale, the tight oil production number, and then filtered through the Baker Hughes rig count just to give me directional rigs, so we could see more of a shale type investment, if you will, on what's actually going on. So the point being that even as these rig counts, you've seen them come down from sort of 2023 when prices got quite high in 2022. Obviously, rig counts went up and then started dropping off as we got into 2024, and then dropping off a little bit more in the second half of 2024, and have been sort of flat since the fall of 24. We have been seeing them drop off a little bit. Rig counts for oil were down 1 this week, so not a huge drop off, but we have seen a drop off since sort of middle of 2024. Yet production keeps on moving higher. Now, I've talked a couple times about the latency. So in other words, it takes 3 to 6 months once these guys punch a hole in the ground for that oil to actually come to market. So there is a little bit of that going on, and I've not adjusted that in this chart. This is sort of week for week, everything's lined up in that perspective. So just again, want to point out, yes, rig counts are going down. That's maybe not the best indicator of what production will do. If we have a huge drop in rig counts, then yes, you will get sort of the requisite drop in production. I don't know that anyone's calling for that right now. It seems like the guidance that we got from the handful of shale producers that have put out their earnings, we're talking about 15 to 20 rigs going down over the course of the next year. Again, that's a relatively small sample size, and we'll see what they do. Again, they were looking at a situation, where it seemed much likely we'd stay in the mid 50s than the low 60s. And that does make a difference in terms of what they're going to do. I did see some articles as well talking about, especially in Texas, the drilling permits going on in May, they're really low. If you look at that May number, it's just through May 8th so far, at least at the time of this recording. And yes, it is low. The number of permits approved from May 1st to May 8th is very low compared to what was approved for the entire month of May in 2024. So that's probably not a fair comparison. What's probably a better comparison is if we look at sort of the full months that we do have data for. And you can see that for every month except for February, we did have more permits approved. Again, this is a little bit ambiguous because this would include permits. This is all permits, right? So it could include permits for companies going just after natural gas, for companies focusing on wet gas or the NGLs side of things and not necessarily oil. So again, it's not, unless you see a huge drop in approved permits going forward from May, which again, it's going to take us several weeks before we get that information coming in. But if we would see them drop for the full month, then maybe you start getting more confidence, the production is really going to fall quickly. So again, by the time we get that information, we will have already had the next OPEC meeting, which is June 1st, and that's probably a bigger market mover anyway. And then the last thing I want to say about Texas Railroad Commission, is sometimes they go back and revise their data. the most recent data point from Texas Railroad Commission is, let's say, subject to change. Maybe not the most reliable data point, so keep that in mind as well. All right, so moving on to the shipping data that we had this week.
Before we go to the shipping data, I think it's really important to just keep in mind what he was saying. Even though the last couple of years rig counts in total have been going down, production of oil has been going up. That means that per well is more efficient. And I think if you dovetail that to what was being mentioned during the US-Saudi Investment Forum last week, there's huge investments and efficiencies that are happening in the oil and gas industry that's tied to artificial intelligence and engineering to being able to pump out more oil more efficiently, being able to scrub those reservoirs to get more oil out at a faster rate, at a cheaper cost, and to be able to drill holes into the ground faster by getting telemetry from the bit at the tip of the bit and changing speeds of the bit and the elevation of the actual drilling to be able to get through these harder rocks as they drill farther down. And with the horizontal drilling, that technology that's being implemented, you can have less actual wells, drill wells, and be able to go farther horizontally. You know, back in the olden days, during the early history of oil production, you had to drill a well vertically and have lots of wells tapping into the reservoir. Well, with horizontal drilling, you just need one well and you can snake through the actual bedrock to maximize pulling the oil out of the reservoir. So efficiency per well is going up. And not only that, it's actually more environmentally friendly with these types of discoveries and implementations. So engineering, drilling technology, artificial intelligence, scanning technologies of the reservoir are all benefiting from a more productive oil well or rig. So rig count can go down, but we can still have more production.
Week, this top bar is the information we had last week. This lower bar here is the information that we have, is the most recent information from this week. So a couple interesting things standing out. If you look sort of the data over the past couple weeks, it looks like May, with using these bottom numbers as sort of a forecast, if you will, that puts us at just over 400,000 TEUs for the month. If you go back and look at the same time period, so I want to say that's week 18 through 22. If you look at that time period in 2024, we did 463,000 TEU. So we are coming up short of a year ago from that perspective. This number for the very end of the month is maybe a little bit suspect. Maybe that gets revised higher. We are getting a very good number for next week, for week 21. So that's sort of a good sign. We'll see if that continues, if that actually proves it.
Okay, so week 21 is over 103,858 for shipping stats. And last week was 84,614. So it's actually, this week's actually better.
Itself out. So you can see that these forecasts we had for the past 2 weeks are actually doing pretty well. Last week for week 20, they were projecting, call it 87,000 TEU equivalent. For now that we have a little bit better data, a little bit better insight to this past week, we're down a little bit to 85,000 TEU. So again, it's a pretty good forecast, I would say. So we'll see how these things work out, especially for week 21, and we'll keep a close eye here on week 22. Now, looking at retail prices, I added this table here because you can get some volatility, of course, depending on what part of the country you're in. Overall, gasoline prices continued to decline. They were down just over almost 2.5 cents. Diesel prices were down not quite as much, but again, they're going down. So it looks like PAD 4, Rocky Mountain and West Coast, you still had price increases, and we sort of saw that previously. These are gasoline prices here. We saw that previously with the wholesale prices in California going up, and that was definitely reflected in the retail value as well. I will say though that we are getting closer to 2019 type values than we are to a year ago. The other interesting thing is, as I mentioned before, seasonally gasoline prices should be going up this time of year, but we're kind of getting to that inflection point where unless you have some sort of big refinery outage or some spike in demand or something weird like that, the prices usually tend to start trending downward like they did last year. Sort of once we get into June, all the expectation, all the hype around the anticipation of driving season sort of wears off and prices sort of start to grind lower from there. So that could be another good sign too for the U.S. driver if things continue to move lower there. But again, got a pretty big drop in lower Atlantic, so that would include Florida and Georgia. Gulf Coast was down 3 cents, Midwest down almost 5 cents, so a pretty big drop there as well. So here's a summary I put in here. Hopefully that helps you guys. And remember, please.
All right, so I think the big takeaway is that rig count is going down, but efficiency is going up. So production's still relatively good in the United States. There's event risk with Iran, deal with Trump, if their barrels of oil will hit the market and bring down the Brent crude price. And what would the Saudis do if that did take place? Would they continue their production? Would OPEC+3 continue their production hikes or trim it back? So let's see what happens. And then not only that, Cushing inventories seem to be a little bit below the normal levels in a 5-year average range. So let's I would say that we're still going to have problems getting over the 63 mark, 64 mark. Definitely major resistance point at 65. If Iran's deal fails, there might be a little bit of a price shock and it'll go up and maybe test at 65, but probably won't go much higher than that, and it'll come back down. So I think a safe trading range for WTI is anywhere from about 63 to about 61, somewhere in there. Okay. Please go to my store, the-studio-reykjavik.com, and get the omega-3. Omega-3 will help to prevent your red blood cells from sticking. So it's going to reduce the overclotting. It also helps bring down inflammation, and it helps to bring down LDL levels and increase your HDL levels. So omega-3 is very important for your cardiovascular health. So please take omega-3 every day to improve your cardiovascular health. Magnesium and zinc is a great supplement to take to help boost up your brain function and your immune system. Take it every day. If you're not feeling well, guess what? Take a double dose. Take one in the morning, take one in the evening. Make sure that you drink it with filtered water. Magnesium also is an important supplement to take to increase the efficacy of D3. If you're 40 years of age or older, you have to start worrying about cellular metabolism and protecting your neurons. Make sure you take vitamin B complex. Vitamin B complex is multi-purposed. The first 4 B vitamins are going to help with your cellular mitochondrial health. All right. And what's going to happen is that first 4 B vitamins is going to help with that health of the mitochondria and boost up that ATP. Your ATP is a major energy source for your cell. In addition, the other B vitamins are going to help to boost up your cellular metabolism. And that way your cells and your tissues are going to perform better. And B12 helps to protect your neuron. So to help to boost up that cellular metabolism, boost up those energy levels, and to protect your neurons, it's very important to take vitamin B complex every day. Now, collagen is a supplement that you should be taking. It has a very, very impressive amino acid profile shown on the screen here. You can read the label on my website, the-studio-reykjavik.com. But collagen is a dual purpose supplement. It's a powder and you get a month's supply. You mix it with soft foods, filtered water, a smoothie, or you can mix it with milk, but take it every day, once a day, 1 big scoop. And what it'll do is it'll help with your skin, your nails, and your hair. It'll improve the health. And it will also improve and help with musculature, the health of your joints and your cartilage, and your bones. So it's a dual purpose, very important to do resistance training to help with your bones and your musculature. So please go to my store, the-studio-reykjavik.com, get the collagen, help with your skin, and help with your joints and your bones. Now, what I want to do is transition to another video here. All right. This video is talking about Treasury Secretary Bassett speaks with CNN's Jake Tapper.
Oh, Jake, first of all, the history of rating agencies, by the time they get to a downgrade, everything's already in the market. Larry Summers and I don't agree on everything, but in 2011, the last time or 2 times ago when we had a downgrade, he poo-pooed it. What I think is important is that President Trump has just come back from this historic Mideast trip, and there's trillions of dollars coming into the U.S. So we are seeing confidence from investors. So I don't put much credence in the Moody's.
The downgrade comes as Republicans are trying to pass the big, beautiful bill, as the president calls it. It's a massive bill that has tax cuts, spending cuts. The nonpartisan Committee for a Responsible Federal Budget says that this bill, if it passes in its current form, will add between 3.3 and 5.2 trillion to the national debt over the next decade. Now, the debt is a concern of yours. You talked about our debt being on this unsustainable path earlier this month.
What are you doing? Oh, I'm just doing myself.
Won't this bill just make it worse?
There are several components there. So if we unpack it, there is the potential growth of the debt. But what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
So when in the first Trump administration, you were not a part of it, but obviously President Trump was. There were tax cuts passed, and the Committee for a Responsible Federal Budget says that those tax cuts added $2.5 trillion to the national debt and did not, I mean, there's always a hope that it will bring about so much revenue growth that it will pay for itself, but that didn't happen.
Well, we also had something called COVID, and so there was a rescue plan.
This is separate from that, though. I'm aware of the COVID.
The CBO scoring was about a trillion and a half off. And again, what matters is the growth. And during President Trump's first term, up until March of 2020, we had very high non-inflationary growth. And that's what I think we can have again this time.
Let's turn to trade, because that's obviously where there's been a lot of focus. President Trump just put 150 countries on notice that their tariffs are about to go higher in the next few weeks if they don't reach a trade deal with the U.S. How exactly will you decide what those new tariff rates will be? Will they be what was previously announced on April 2nd, so-called Liberation Day? And when will they actually go into effect?
So, Jake, we have a 90-day pause. There are 18 important trading partners, probably another 20 strong relationships. President Trump has put them on notice that if you do not negotiate in good faith, that you will ratchet back up to your April 2nd level.
So the 90-day pause isn't just China, it's everybody?
No, the 90-day pause was put on about a week after April 2nd.
That first 90-day pause.
The first 90-day pause.
Yeah.
And I can tell you that with a few exceptions, the countries are coming with very good proposals for us. And I look at these proposals and they want to lower their tariffs. They want to lower their non-tariff barriers. Some of them have been manipulating their currency. They've been subsidizing industry and labor. And I look at these proposals and I think these are excellent proposals, but I wonder, how did we get here? How did the previous administrations allow this to happen to the American people?
So 150 countries have been put on notice. How many deals do you think you're going to be able to announce, and how quickly?
Again, it will depend on whether they're negotiating in good faith. And there are a lot of smaller trading relationships that we can just come up with a number. My other sense is that we will do a lot of regional deals. This is the rate for Central America. This is the rate for this part of Africa. But what we are focused on right now are the 18 important trading relationships.
Walmart announced this week it's going to have to raise prices on some goods, and they blame Trump's tariffs, particularly the tariffs on China. Here's the CEO. Take a listen. So President Trump went on Truth Social and says Walmart should eat the tariffs. In other words, not pass on the prices to consumers. Doesn't that inherently serve as an acknowledgement that tariffs are essentially a tax on consumers? Because initially President Trump said, well, other countries, that's not true. Countries pay for the tariffs. But here we have a perfect example. China gets these tariffs, and then Walmart has to raise its prices, and consumers end up paying for them.
Well, Jake, in essence, what you're saying is you're saying taxes are inflationary, so let's pass the Trump tax cuts, and that'll be disinflationary. If we continue that line of thinking.
I don't know that you can put me on as endorsing anything, but go ahead.
Let's just keep everything consistent. I did speak to Doug McMillan, who I have a very good relationship, yesterday, just to understand what he had to say. And understand that came from an earnings call. On an earnings call, because of SEC requirements, they have to give the most draconian case. So Walmart will be absorbing some of the tariffs. Some may get passed on to consumers. But the other thing that's happening is that inflation is down. We had the first drop in inflation in 4 years under President Trump. The other thing that Doug mentioned to me is for his consumers, for his buyers, the most important thing are gasoline prices. And this administration has gotten gasoline prices down. Service prices are down. So overall, I would expect inflation to remain in line. But I don't blame consumers for being skittish after what happened to them 4 years under Biden. We had the worst inflation in 40 years.
So ever since Liberation Day, April 2nd, I have a weekday show called The Lead. And ever since then, every day pretty much, we interview a small business owner. Some of them are Trump supporters, some of them are not, some of them are tariff supporters, some of them are not. The one thing I hear from almost every one of them is the uncertainty. They don't know how to plan for the future because they have no idea what's going to come. The other thing I hear is that their margins, these are small business, their margins are so thin, 5 to 10% max. And they say that these tariffs are just taking away all of their profit margin. So I guess my question is, what do you say to people concerned about the uncertainty? And what do you say to people who say, small business owners who say, we need relief? Because they say, like, I'd love to buy lithium batteries in the United States, but you can't. They're only available for small businesses from China.
Well, couple of things to unpack there, Jake. One is that we didn't get here overnight in terms of this terrible trade situation we have with China, but also with the rest of the world. And President Trump is renegotiating these, and strategic uncertainty is a negotiating tactic. So if we were to give too much certainty to the other countries, then they would play us in the negotiations. I am confident that at the ends of these negotiations, both the retailers, the American people, and the American workers will be better off. That what we saw with China was the only country post April 2nd to escalate. So both sides escalated. We got to an untenable level. We were at 145%. They were at 125%. And we had a meeting in Geneva last weekend, and both sides came down 115%. So the U.S. is now at 30%. A 10% reciprocal tariff that's on a pause, and 20% fentanyl tariffs. Those were put on back in February. So those are already in the system. So I think most of the small businesses you're talking to, they were probably they are referring to the very high triple-digit tariff levels, which have now been brought down.
Yes, some of them were, but there's also just this idea, a lot of them saying, look, I support what President Trump wants to do. I support the idea of wanting to bring manufacturing back to the United States, but it can't be done in a month or 3 months or even a year. That there is just an entire infrastructure in this country that is lacking. They can't buy what they would love to buy. Most of them, as you know, if not all of them, are patriotic. They want to buy American goods, but a lot of this stuff just isn't made in America. I mean, we could go into a long history about the hollowing out of the manufacturing base that is neither the fault of you, me, or President Trump, but it does exist, and it will take years to make the manufacturing infrastructure that these small businesses rely on.
Well, Jake, I think what we're going to see, just like we saw with the UK trade deal, my sense is it's what we'll see with China. We don't want to decouple with China. And President Trump actually wants to open up China for business. So the manufacturing we want to bring back, we had during COVID, we realized that we had some very strategic shortfalls, whether it was medicines, semiconductors, steel, the other products. So the medium-term goal is to bring back these strategic industries as quickly as possible. And I think we will continue trading with China in the kinds of products that these small businesses are talking about at lower tariff levels.
Before you go, you joined President Trump on his Mideast trip, and he's been defending from criticism from both liberals and conservatives to accept this $400 million luxury jet as a gift from Qatar to use for the duration of his presidency. And then I believe for his presidential library, Trump says he's giving it to him as a nice gesture. You're a hard-nosed businessman. Even if Qatar isn't asking for anything in return now for the jet, I mean, that's a bill that could come due. Nobody in the Middle East gives things just to, or anywhere in the world, just gives a $400 million jet just to be nice.
Well, I don't know, Jake. The French gave us the Statue of Liberty. The British gave us the Resolute desk. I'm not sure they asked for anything in advance. And the more important airplane deal was there's $100 billion of orders from Qatari Airlines to Boeing. Kelly Ortberg, the CEO of Boeing, was with us in the Middle East. This is the biggest order in the company's history.
Exactly. See, here's the issue with the liberal media, including Jake Tapper, CNN, CIA. They want to try to have this story stick where the donated plane is for some sort of, favor to the Middle East, to Qatar, and we have to worry about, some sort of infiltration in our government. Trump is on the take and all this stuff. Totally bogus. It's a total bogus story. The reality of the situation is that Boeing needs to design and manufacture the next Air Force One and Air Force Two. I believe they ordered 2 of them planes, maybe 3 planes, but at least 2. But the thing is they're behind schedule and behind budget, or escalated with, not behind budget, but they've escalated their costs. So they have problems with the budget of their plane, and they're way behind schedule. And Trump's using this as a means to put a little bit of pressure on Boeing, and almost kind of like bad publicity on Boeing that, hey, get your act. The Qataris bought over 100 planes for Boeing, the largest order ever. I don't know, in the tune of 100. I think it was 200. I think it was $200 billion worth of items, and I think it was 146 planes. I could be wrong with the number, but I think that's what it was. But the point here is that if someone is giving something, you would think that the United States would be giving the Qataris something for free. But that's not the case. They gave a $400 million plane to the Defense Department, not to Trump. And they're willing to buy all these planes from Boeing. So it's a win-win situation for the United States. So honestly, I think it just shows Boeing in a negative light that they can't get their act together when they get this huge order from the White House to make Air Force One. So Trump has done more for Boeing than any president ever, probably in American history. It's shocking on how the mainstream media is always trying to demonize Trump. Always, nothing that Trump can do is right. Everything that Trump does is wrong, according to the mainstream media. Now, I personally think that taking the plane as a goodwill gesture is important, especially with the cultural norms of the Middle East. But using the plane for Air Force One, probably not, because of the national security aspect to it. So it gets donated to his library. No big deal. It's not that big of a deal. We didn't pay for it, right? And we're getting money by selling goods via Boeing to the Qataris. So it's a win situation for the United States. Now, some people would say, well, it would take tens of millions of dollars to retrofit and to sweep the plane and to harden it and all this stuff. Okay, then just take the gift and don't use it, and just mothball it, and then just donate it to the library. It's not a big deal. It's really not a big deal. What was a big deal was getting that Boeing contract. And that was what's more important. And so it doesn't seem as though that there was some sort of major major foul that Trump did by taking the plane. My understanding is the plane is actually delivered to the United States, and that the Defense Department is looking into the plane right now, but I could be wrong about that. Please go to my store, the-studio-reykjavik.com, and get the Gladiator Barley. The Gladiator Barley is going to help you build muscle. It's a high density protein. You take a full scoop or a half a scoop every day, mix it with soft foods, or mix it with filtered water. You can mix it with milk or a smoothie, but take it every day. It's a great way to build muscle, but it also will help to detoxify your body, bring down inflammation, and soak up free radicals through superoxide dismutase. Really important. And another great supplement that you can take is the heirloom barley. Now, the heirloom barley is a little different than the Gladiator barley. Heirloom barley will detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. You get a big scooper, take a full scooper or half a scooper a day. It's a high density protein, but it's not really focused on gaining strength. So please go to my store, get the heirloom barley or the Gladiator barley. I take the Gladiator barley. And also get the Boomer Boost. The Boomer Boost has 68 nutrients. The compound is shown on the screen here. Also read the label on my store, the-studio-reykjavik.com. But it's very comprehensive, and it'll focus on multiple systems. It'll help with your heart and your vascular system. It's going to help with your brain function. It's going to help build muscle, and it's going to help to build higher energy levels and rev up your metabolism. You will lose weight by taking this, and you're going to start getting healthy. A great way to build that vitality and to have more energy and be more active, take Boomer Boost. Take a full scooper every day. Take it for your breakfast or for your lunch every day. You'll save money and you'll lose weight. This container that I have in my hand is a month's supply. So take it once a day, every day, for breakfast or for lunch. Mix it in soft foods, filtered water, milk, or a smoothie, and just use that as your breakfast. You're going to lose weight. You're going to help control your A1C levels. You're going to help, control your blood glucose levels. That's really important. And you're going to be targeting your heart, your vascular system, your musculature, your brain function. You're going to notice that you'll have less brain fog. You'll get rid of that brain fog. You'll be able to concentrate better. You'll be able to sleep better. You're going to have a steady burn of energy throughout the whole day, no spiking. And you're going to be losing weight. So please go to my store, the-studio-reykjavik.com, get the Boomer Boost. Stack it with either the Gladiator barley or the heirloom barley for max benefit. That especially with doing resistance training, what will happen is you're going to start being able to control your A1C levels even better. I also have ashwagandha root. Ashwagandha root helps to bring down cortisol levels and help to control your blood glucose levels. Very important to bring down inflammation to help boost your immune system and help with your cardiovascular system. Good Night formula has tryptophan, melatonin, GABA, and passion flower. That's going to allow you to go into 3 cycles of REM sleep and deep sleep. So you can detoxify your central nervous system, be well rested when you get up in the morning, and help to consolidate memory. So take Good Night formula every day to help you get into that 3 cycles of REM sleep and deep sleep for proper health and brain function. And with the proper sleep, you're going to slow down the aging process and improve your neural health. Resveratrol. Resveratrol is something that I've been taking for decades. It's going to help soak up free radicals, help with the health of your mitochondria. It'll help to boost up those energy levels, ATP, and it will help to express genes that are more in line with a youthful profile. When you get older, what happens is your gene profile, the epigenetics changes, and so certain genes are turned off, certain genes are turned on. And if you take supplements and you bring down inflammation and soak up free radicals on a regular basis, what happens is you are slowing down that epigenetic change, and therefore you are aging slower. So it's very important to take resveratrol for youthful gene expression and to get rid of cells that are in senescence. Cells that are in senescence just collect garbage, and that's not good for your tissues. And the first pillar of my core protocol is the max 35, max 14, and cleanse. Cleanse is 30 parts per million, max 14 is 14 parts per million, and max 35 is 35 parts per million. You take a teaspoon a day, every day, swish it in your mouth, gargle about 20 seconds, 30 seconds, then swallow. What's going to do is it's going to help improve your epithelial lining, your mucosal barrier, help to improve that oral cavity health and the oral pharynx, and boost up that immune system. Very important to take every day. I've been taking max 35 or max 14 for over 5 years, every day. If you're not feeling well, take a tablespoon or two, swish in your mouth, gargle 20 seconds or so, and then swallow. Go back to your maintenance dose once you feel better. So please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. And by purchasing the products and stacking them the way I'm telling you to stack them, you're going to improve your health, slow down the aging process, boost up your immune system. Now, lastly, hopefully we can get this video playing. It's talking about the actual war in Libya and how it may, we'll talk about how that might affect the oil market. Hopefully we can.
The instant relief for snorers in 2025. Hey, stop using stupid nose things for snoring. This is
Unfortunately, that story doesn't have audio. It just has video and a soundtrack to it. So I'll try to get some more information on another show about the new war that erupts in Libya. Sometimes in India, the news doesn't have audio to it, and that's a little upsetting here. Let's try First Post. First Post might have some audio about this.
Hello and welcome. We begin with Libya, where the capital Tripoli has been rocked by heavy clashes. At least 6 people have been killed, with local media reporting that an armed group leader was among the dead. This is likely to trigger a major shift in power. Plumes of black smoke rose over Tripoli as gunfire and explosions echoed across the city on Monday night, after fierce fighting broke out between rival armed groups. Armored vehicles rolled out and security forces were deployed as tensions gripped the streets of Tripoli. Clashes have now subsided after a truce being announced, but the situation remains tense. The violence was triggered by reports of the death of Abdel Ghani al-Kikli, now a powerful militia leader who led the group's security stabilization apparatus, or the SSA. Kikli was a dominant figure in Tripoli and had been controlling large parts of the city, including government offices, prisons, and financial institutions. He was often called the de facto king of the capital. Kikli was reported killed under unclear circumstances. Photos of his body circulated online, though not independently verified. But reports of his death set off hours of heavy clashes between his loyalists and rival factions. Soon after the news broke, forces loyal to Prime Minister Abdul Hamid al-Dabeiba took control of Kikli's strongholds. They swept through the SSA's bases, removing symbols, clearing our fighters, and reclaiming key locations, including parts near the central bank. Now, this marks yet another chapter in Libya's long-standing.
Now, this is important because remember what OPEC 3 stated with their production increase, about 400,000 barrels a day. Now, if Iran gets back online, we're talking probably over 1 million barrels a day of added supply. And Libya has about, depending on where you search for your source of information, it looks like the barrels per day is approximately 500,000. So if the Saudis do increase by 400,000 barrels a day and there's some sort of disruption in Libya in terms of production, it may be offsetted by that amount or maybe slightly more.
Instability, which began after the 2011 uprising that overthrew dictator Mohammed Gaddafi. Now, since 2014, Libya has been divided. Eastern Libya is mostly controlled by the military leader, Khalifa Haftar, and Western Libya, governed by the UN-backed Government of National Unity, or the GNU, and it is headed by Prime Minister Dbeibeh. Tripoli itself has been fractured, with multiple militias competing for power. The latest events may now signal a shift, with fewer groups under tighter central control, potentially strengthening Dbeibeh's grip on power in the capital. But this power consolidation in the West may also escalate tensions with the East, where Haftar's forces hold Libya's main oil fields. Despite repeated international efforts to end the East-West split and to hold national elections, Libya remains deeply divided. The country has also become a stage for regional power struggles, with Russia, Egypt, and the UAE allegedly backing the eastern faction led by Haftar, while Turkey is supporting Dbeibeh's government in the West. How will the latest clashes change the power dynamics in the nation? To discuss further, we have with us Mohammed Al-Jard, who is the co-founder Libya Outlook for Research and Consulting, and he is joining us live from Casablanca, Morocco. Thank you for being with us.
Thank you, Alison, for having me.
Now, what triggered the latest armed clashes in Tripoli, and how significant is the reported killing of the armed group leader in this escalating violence?
So the new bout of violence in Tripoli has to do with the fact that the Prime Minister of the internationally recognized government, Abdelhamid Dbeibeh, wants to maintain his seat of power. Recently, the United Nations, through the advisory technical committee of Libyan experts, came up with plans, if you like, or a number of scenarios of how to end the political stalemate in Libya and form a unified government and move the country to elections. And all of them start with a change in government. The Prime Minister, obviously, of this internationally recognized government, Abdelhamid Dbeibeh, wanted to redraw the security and the military scene in Tripoli. And he asked armed groups that are loyal to him to attack other armed groups that are not entirely loyal to him, despite the fact that they are institutionally under his government and they have the legitimacy and are paid by his government and by the executive authority in Tripoli. So this basically was an attempt by the Prime Minister of the internationally recognized government to cling on to his seat of power and to ensure that whatever process that comes through the UN or otherwise would have to come through him, and where he would have to be on the table and decide what kind of government there might be. So this is why we have seen these clashes. It is not because the militia leader was killed. The militia leader was killed because of Dbeibeh's orders to his loyal armed group leaders to start moving against the stabilization force, whose leader was assassinated, according to government sources in Tripoli now, that he was assassinated after a meeting with armed group leaders loyal to the prime minister of the internationally recognized government.
Right. And how do these clashes reflect the ongoing power struggle between the UN recognized government in Tripoli and the Haftar-controlled administration in the east?
So it's just to confirm once again that this is an internal Tripoli issue. Khalifa Haftar in the east, or the authorities in eastern Libya, have had nothing to do with this. However, the reason that Abdulhamid Dbeiba is trying to redraw the prime minister of the internationally recognized government, he's trying to redraw the military and security scene in Tripoli and to have monopoly there, so that he becomes the only actor that Haftar would have to deal with if there is going to be a unified government and a unity in Libya, and where the international community, including the United Nations, would have to deal with him. But unfortunately, the plans of the prime minister of the international recognized government, Abdulhamid Dbeiba, didn't go as he wanted or as he anticipated, given that he has now faced fierce opposition from other powerful armed groups in Tripoli, like the Rada force. There are also now armed forces coming from the west of Tripoli, Zawiya and the Warshafana areas west of Tripoli. But now it looks like there has been a truce, if you like, in Tripoli. There has been calls for de-escalation, but it looks like the internationally recognized government led by Abdulhamid Dbeiba is currently in a very difficult situation after its plans to redraw the military and security landscape in Tripoli seem to have failed to achieve the intended results.
Yes, and what are the potential implications of this renewed violence on Libya's not just stability, but peace negotiations and, of course, the prospects for national elections?
So basically, as I said, this new bout of violence is directly linked to the recent announcement by the United Nations that the advisory committee that it has appointed has now come up with possible scenarios or proposals on how to move the country forward and unify the country's institutions. Now, this bout of violence indicates how difficult the environment is when it comes to enforcing those plans that start with the formation of a new unified government, which means that the current government in Tripoli and also the rival government in Benghazi, called the Libyan Stabilization Government, would both have to be gone in order for a new authority to be formed. Obviously, this represents both a risk to those UN plans, but it could also represent an opportunity, especially if Abdulhamid Dbeiba's efforts to try and derail this UN effort to form a new government fail, and then he's forced out of government. Then that opens the door quite wide open for the formation of a new unified government that its main mandate is supposed to be to put the country on the path for elections within 18 or 24 months, according to some of the excerpts and the leaks from those United Nations plans. But as you can see, that the situation remains quite fluid, uncertain, with lots of risks, but potentially with also opportunities.
Yeah. Right. Mohammed, thank you very much for being with us on First Post Africa.
Thank you very much for.
All right, that's the end of the show for today. Hopefully you enjoyed this format. Thank you for listening, and please help support my work by going to my store, the-studio-reykjavik.com, and get the great supplements that I offer. Make sure that you use discount 5 and you get $5 off any order, and share the links and ask your social media to follow me. Thank you for listening and have a nice day.